Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
Hey guys, you want to get rich? One way of getting rich is looking to buy a franchise. Who are we hanging out with? Lance Hood. Dude knows how to buy franchises and how to help you get rich potentially buying a franchise. What's going on, Lance?
Hey, Kenner, thank you for having me. Well, I would say that there are some people that do very, very well, and there's some people that do average, and there's some people that do poor. It's like everywhere you've ever worked, there's the top performers, the middle, and the bottom. So uh, maybe the best way to do it is to start with a good brand and then make sure that it works with you as a person, because
Yeah,
otherwise
man.
it's going to be a drag.
I totally get it. I totally get it. I'm excited about this one mainly because I think there's a lot of people who could be, increasing their net worth by buying into a franchise and just don't even know, or they don't know how to do it. They don't know who to call. And I think that obviously you're a good resource. So I'm going to ask you some questions right off the bat because I'll always forget, how does someone get a hold of you if they're interested in getting into a franchise or using you and your services?
Sure. Well, my website is ARC Franchising. Also, my virtual assistant, Ashley, is at 515-417-3117. You can ask her about anything you can think of with franchising, and she can answer it for you for
All right.
sure.
Maybe I should be talking to her instead of you. So, help me explain a little bit kind of the fundamentals to franchising because a lot of people don't know, and I think should because again they can make a pretty good net worth based on franchising, buying a franchise, etc.
Yeah, with franchising, there's all kinds of models. There's what you think of an owner operator, where you're working at full time. There's also a semi-passive, which some of it can be from start with a manager, and some of it you work your way into it. But semi-passive is generally, 15 to 20 hours a week with a manager, and you manage the manager. And
Mm-hmm.
there's a few, very few, because the more passive you make something, the harder it is
Yeah.
to make that, replicatable for everybody.
Mm-hmm.
But there are investor type models. And then what I would say is this: you have to look at a franchise. It is an investment. It is a business. You kind of look at an entrepreneur. They don't want to be told what to do. They just but there are other people who see it, the more successful people that run franchises see it as leverage.
Wow.
They're not trying to create their own business. They're going, listen, this thing that this other guy is doing is successful. I don't have to learn it. I can just kind of learn how to run it and maybe get somebody else to run it for me. And then with that, I can just open up 2, 3, 4, 10, 20. There's people that have 1,000 locations of
Yeah.
franchises. They become big corporations that just open franchises. So, they're all different.
Yeah.
And
Which makes sense. I mean, obviously, it totally makes sense. So, what are some franchise? By the way, my name's Kenneth French, Vast Voice, telling business secrets to entrepreneurs. We're lucky enough to get Interview Valet's hot business podcast, one of them. So anyway, but so tell me a little bit about. So, do you have like 10, 20, 30 brands you work with as far as franchising, or how does that work?
It's always changing because you find some brands are better than you thought and some are not as good as you dig in and work with them, because there's a lot of components to it. Because when you have a brand, you have what the brand has done itself corporately, you have what other franchisees have done and produced, but then it's really it really changes because every individual is going to have a different response, to the brand. And I look for people to have a consistency, meaning that they're vetting people strong enough to where the people that make it through are more successful. But
Mm,
when you put a location in your city with your specific customers, and your marketing and your staff, you're going to have a different result. And in fact, if you have 3 locations in your area, all 3 will have slightly different financials. They're
mm,
just not going to produce exactly the same. And so it's really the operator is key. And I kind of look at it like this, like a race car scenario. The franchise is the car. It doesn't do anything. It just sits there. You're
Mhm.
the driver, and it's how you drive that car. The franchise is telling you how to drive it, but you have to do the driving. And then you're telling me what you want to accomplish. I'm saying, well, for your resources, the scenario, I think this is going to be the best car for you.
Mhm.
You know what I mean? So that's kind of how it all works together. But it's not like the stock market where other people are consistently doing something and you're really not doing anything but putting a commodity called dollars into it and seeing what dollars come out. You're
Mhm.
actually either the operator or the leader of the manager team. So it's really a lot of it's affecting you. So I think operator development is one of the keys to effective franchising, not just the model.
Yeah, I get it. So, okay, let's just use me as a case example. I've been around
Mhm.
for whatever in business as an entrepreneur since '06, by the way, at vastsolutionsgroup.com, which I run. We do business all over the country, do tax, finance, and artificial intelligence to help entrepreneurs, usually lower tax legally and ethically and morally, by the way. But so what would you present to me? What do you think would make sense for me? This is a hard one because we only have a few minutes, right? But what would you think makes sense for me as far as getting into a franchise and then expanding it, et cetera? I know it's a tough question, but I'm going to throw that question out to you.
Sure. Well, I would say that we're gonna collapse 60 minutes down into like 30 seconds, because I don't know your finances, I don't know your goals, what you're trying to accomplish and
Yeah.
everything, and your background beyond this.
Yeah, but let's say I'm
Let
trying
me
to
just
good
say,
question. Let's say I'm trying to leverage my clients. Who knows?
Mhm.
Entrepreneurs all over the country. Usually, our clients are people who are listening and watching this are well heeled. They have pretty good net worth. Real estate investors. All entrepreneurs. I've been in business since '06. Ivy League grad. Been around. I've written 4 books. Let's say I have some dough. I want to buy into a franchise. I want to leverage what I have as far as all my contacts in the business world, and they're, pretty well-heeled people. All right, go for it.
Myself, I would think that maybe in the industry where they sell businesses,
Mhm.
because it would complement kind of what you're doing. You would have your existing expertise, would have some good understanding, and with a lot of those, you don't have to be the person doing it. You can, just like a real estate company, you can have agents underneath you that
Mhm.
help people, and you would oversee it.
I like
Um,
that. Well, so
because
I guess throw out some good some brands that you have that might kind of complement, or I might be able to leverage some of my existing, what you just heard.
it, you know, it is hard
Mhm.
to do that because I don't even know what's available in your area. And I know you're talking about just companies in general, but
Mhm.
I mean there's a few out there. I would say that I would just have to look. It's hard to give out specific names without all that research,
Yeah, I get it. I
Um,
get it. That
the-
is kind of
and
cool because you have to know me to be able to make the determination, just like you have to know our listeners and viewers kind of to be able to, I guess, pair them with a good brand that would complement them and also complement the brand. Basically, is what you're saying. You really do your research.
Right. And it's like you have to have the finances to qualify. Has the one still be available in your area?
Mhm.
I mean, there's a lot of things. And if you see it in your area, you might not be able to get it because if you see it, it could is most likely sold out already. So usually you're bringing something new. The reason people think that you see something and then you open one yourself is like something like a food brand. And the reason is
Mhm.
in franchising you have territories, and in food, that territory, or fitness, the territory might be 3 to 5 miles. So as long as the demographics and financials hold up, you can have another location every 3 to 5 miles. But when it comes to other businesses, that territory might be anywhere from 200,000 to 500,000 population. So there may not be that many locations in your area just due to the business model.
Well, I got you. And you also deal with kind of how much of physical brands per se, maybe even brick and mortar, I would assume, versus kind of otherwise. Like we're virtual. We've been virtual since '06, since I came on board at vastsolutionsgroup.com. So it's been, I mean, we don't have any geographical boundaries for the most part.
Yeah, and that's another thing is the cost of the business is going to determine based upon the the building. So if you think about it, if you're a coaching type business, because one of the other things I was thinking is like a coaching type company, because some of those you can have a platform where you have coaches underneath you, business coaches.
Business coaching.
So with that, I would just say that if you are in the coaching space and it's a home-based business, then your cost to get started is very low. In fact, it might just mostly be the licensing, training, and your marketing budget. But as you get into something that starts taking more expense, it might get up to, an inexpensive home services type business might be 150,000. The average might be 250,000. You start getting into food and other things with a bigger structure, it's probably going to get 500,000 or plus. Just because, think about it, you got to find the building, put a lease on it, renovate it, furnish it with everything that needs to do that type of business, and then have a budget. And if you have a lot of employees, every employee is going to add additional cost to it. So when I look at someone's budget, I will suggest things based upon what I know they can qualify for, because there's no point of talking to people about something that you're just not going to qualify for. And also, when I get to know people, I'm just like, when you know the brands, you're just like, I don't think the brand's going to end up really, it's not going to be a good fit, and like you, I just looked at you, you're not going to do a brand that's going to take a lot of your time or full time. So when I was thinking about that, I'm like, well, I can't really show Kenner something that isn't going to be something that's more semi-passive or an investment model. So that's why, everything's going to work for your lifestyle.
So, and then again, speaking to a broader audience, let's leave me as an example. We're now talking to our listeners and viewers out there, maybe even our clients. But what's a typical buy-in? I know it's a hard. I'm just everything you're gonna say is it depends. I get it because you're a consultant, right? But what would you say is a kind of typical buy-in, or maybe as far as maybe a net worth for someone that need to be able to have to get into franchising?
Sure. Well, if I'll just look at it as four kind of buy-in levels. You have the 150,000 and or under, which is your smaller businesses or consultant type things. 250,000, 300. These are more heavy buildings. You might have an HVAC company or something like that. And then you get up into the 500,000s, the 800,000s. This is like small food, QSR type stuff. And then it goes up beyond there, and usually you're thinking 10 to 20% down with a loan. So, usually if it's smaller and you have good credit, 10% might work for you. Otherwise, it's typical to think that it would be 20. So that just means 10 or 20,000 per 100,000.
Yeah, and you have connections to getting financing for people who are looking to get in the franchise world, correct?
Yeah, and I would tell you that people think they'll just go to their local bank, like the one they get their mortgage from, and it just doesn't work that way. You have these you need a commercial bank, especially that's used to franchising, because there's a couple things. Most franchising is going to be a startup, which is not what most banks have in their portfolio they're trying to lend to. And then also, you have to understand, the lender has to really understand the FDD, and because franchising is a regulated industry, and so it's better to go with a group of lenders that package your loan up for you and might send it out to 100 different banks that want specifically franchise loans. You have much better approval rating than going into a single bank and then 3 months later finding out it doesn't work and having to start from scratch.
Yeah, and again, that's where you add value in your engagements. I would assume is because how to navigate those waters of the financing. I would think.
Yep, and depending on how much the loan is, I send them to different people. And some people do a lot of loans, but they're very picky. So if the bank just for some reason doesn't want to do your loan, they're not going to fish it around and help you with a second lender. So and other ones will do it till they get you a loan.
Oh, yeah. Yeah, and franchising I think makes a lot of sense. If someone could, buy an established brand, I'll pretend McDonald's as an example. Everyone kind of knows the McDonald's name, and if you could buy an established brand, buy into the idea of a McDonald's, then who knows? You could get one, two, sorry about that, 1, 2, 3, 4, et cetera. Get a whole bunch of them, and then you're really good to go. It really would increase your net worth.
Yeah, as long as you can effectively manage them, then absolutely. So I think that franchising is a dream business for the right people, but not everybody's made to own a franchise. Not everybody's made to own a business. And I would just say that when you get to know people, you can advise them. For some people, it might be, hey, maybe you should just put your money in gold and silver. You know, like it just depends on your commitment to personal growth and leadership, you know, and stuff. And if you're like, well, I want them to get started, but then I want to do my own thing. Well, then maybe we should look at a business opportunity where you don't have those restrictions.
Yeah,
So
yeah,
there's the ways to work with people. You just work with what their goals are, you know.
yeah. I totally get it. So then, what's an engagement look like with you?
Well, you know, my help is always free. The reason is that with the franchise companies, they have already set aside what they're going to, how they're going to compensate their own internal team. But if I find somebody, then they just compensate me instead. So it doesn't cost the client anything. They don't save any money trying to talk with the franchise company. They don't. It doesn't cost them any more to work with me. In fact, we look for the discounts. I also part of what I do is also sell my client to the franchise brand because they are looking for top operators. And if I bring them someone who's not financially qualified, who's not business owner material, who isn't, you know, really excited about their company, they get pretty annoyed because the reason they want to work with me is they're like, listen, Lance has already showed this person a lot of options. They have really checked us out. They're qualified and they want to talk with us. That's the whole reason. And then, you know, and then I stay in it to keep communication going because you'd be surprised how communication can fall off and then things just sit out there. And so I come in and make sure that everybody's on the same page and sort things out.
I understand. So, okay, here's a really tough question. I guess all my
Mhm.
questions are kind of tough. So, as a general rule, what type of rates of return theoretically am I looking at? And I know that's a hard
Mhm.
question, but I'm just thinking, we have some clients who are pretty well heeled, and they might want to buy a brand, a franchise,
Mhm.
and they have some money. They might be thinking, well, what's in it for me? What kind of rate of return am I going to get? Um, again, I know it's a hard question.
Mhm.
Just in general,
Sure.
what are your kind of
Sure.
thoughts?
You know, it's in the what do you say? Infrastructure heavy businesses may be more passive, but the cost of that infrastructure isn't going to give you as much of a return per dollar put in because you have such an expensive infrastructure. Anything that's super cheap is going to require more of your time and sales, which means you're making more money. But I would say if you put all the brands in, 20% of companies will list an item 19, which is a financial disclosure. So the only way you find out what you're going to make is two places. If it's listed in the franchise's financial disclosure, or a franchisees tell you what they make. Franchisees don't have any restrictions. Every franchisee can tell you what they make. So those are the two places. So when you read the item 19s of the franchise disclosure document, 20% of them will have an income claim. The other ones don't want the responsibility of having an income claim. They will just point you to the franchisees.
Mm,
If you look at what is in the average income claim, I would say if I looked at everything from a slushy shop on the side of the road that's like a shed, all the way up to like, you know, a high performing huge business, I would say just in general, not talking to any companies or anything like that, you probably see returns of 50 to 120 is normal. You can see some that their item 19s will show two, three, four, five, six, $700,000 for a location. But
mm-hmm.
for the average person, they might get um, a brand that is showing on average 150, and then they might buy 3-pack, and so three times 150. So depending on people's goals, as long as it's a semi-passive brand, I mean, if you're like, I have to hit this number, well, like, well, you're looking at the numbers I'm looking at, you might need 4 locations. And when you do multiple locations, um, you always start by opening up only one.
Mm-hmm.
The huge mistake to do more than one. You do one, and then 6 to 12 months later, you take your second license, which you've already like reserved the area so no one can buy it. Then you open up the next one, and then 6 to 12, you open up the next one.
I like that. I like those rates of return sound pretty good. So, getting ready to close the door here. What's the one thing we haven't talked about that you think can add value to someone who's looking at, buying into your services or buying into, let's just say a franchise?
I think that if you're curious, there's probably something that makes sense out there. I would sit down and look at it because most people they don't realize the potential that's out there. Like you said, with some of those item 19s that are out there, some of them are very impressive, but I'll tell you, like, it's not like it's an investment model. Everything you have to watch, you have to remember that you are the primary operator. But I mean, man, it can really be worth it if you look at it as a leverage model, not as my own business, but as something I'm leveraging.
Yeah, because you're leveraging their brand, theoretically their expertise. Yeah, I
Your
totally.
business partners.
Yeah, yeah, 100. I would think, yeah, and sometimes there's good business partners, sometimes there's bad business partners, and where you add value is you're probably a pretty good matchmaker. You're like a Match.com for franchise.
Right. And the one thing that you made me think of that I didn't bring up is the corporate culture. Most people don't realize how big that corporate culture is. And you matching people that are going to be repelled by a corporate culture, because sometimes as they grow, they become more corporate-y, and sometimes the young ones are so flexible that they're almost like a startup, and you're going to have the owner's cell phone in your pocket, and you can call them up. So it really depends. But corporate culture is a big thing people don't realize. And big names don't mean a lot. Some of the biggest names have some of the worst returns.
Yeah, I would think that, yeah, I would think. It's just like everything else. It depends with whom you kind of associate. And the end of the day, sign the deal with, I would think. But all right, one last time, how does someone get a hold of you if they're interested in connecting with you, Lance?
Sure. You can book a appointment or learn more at arcfranchising.com, or you can call my virtual assistant and she can answer any questions you have and put you in my calendar too at 515-417-3117.
I dig it. Man, Lance, that's been a good one. It's been a good one. Again, if anyone's interested in buying into a franchise, need a consultant as far as franchising, Lance is your man. By the way, this is Kenneth French with Vast Voice, telling business secrets to entrepreneurs. Thanks, everybody.
Thanks.